I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Really good to have you here. Thanks for being here.
Hey, thanks a lot, Charlotte. Nice to see you again.
Really good to see you. We've got a lot to go into today. Gold, tariffs, maybe a little bit of China, critical minerals. Where we're going to start before we start getting into everything there is you've got a couple of conferences coming up. So we'll talk a little bit about the details there before we jump into everything else that's on the agenda.
Sure. Thanks a lot. Last year, we did 2 successful conferences, one of which was in Fort Lauderdale, Florida, at the Four Seasons on the ocean there. And I decided to do it a bit earlier this year in May, number one, to avoid the hurricane risk. And number two, because I thought gold was going to 3,200 by June, as you know. And we talked about that in December and again in January on your show. And my target's been hit already in April. So I'm excited about that. And now I've got to think of a new target. We'll get to gold in a minute. But this conference in Fort Lauderdale is exceptional. The Four Seasons is only 3 years old. It's a beautiful hotel. So if you have the interest as a client to attend a conference, this is a great starter conference. It's not the 200 companies that you'd see at PDAC or 150 at VRIC. I mean, this is 30 or so companies at each event, more of a boutique kind of setting where you can meet the CEOs and actually talk to them for a significant amount of time and get a better understanding of whether or not you want to invest in that company. These are not going to be that small in the future, I don't think, because gold and silver and copper are all starting to move. And there's a lot of interest on both the investor side as well as the generalist side, people that are investors in other sectors, right? Technology, healthcare, finance. I see a lot of people coming to me that I've never talked to in years that are just like, hey, tell me why I should be buying gold stocks. Why is Barrick and Newmont so cheap compared to the price of gold? I mean, I'm getting these texts like literally every other day. And so then the other component would be Atlanta. We decided to do conferences back to back, Charlotte, so that CEOs that were attending the Florida one could jump on a plane literally the next day and go to Atlanta with a completely different set of clients. That's going to be at the former Ritz-Carlton, which is the Whitley Hotel in Atlanta, Buckhead, May 14 through 16. So we hope that if you're an investor, you'll come. And we hope if you're listening as a company or IR rep, encourage your company to come. I mean, this is the time to go for it. You know, we've all spent marketing dollars that have gone into a black hole in the past. This is not that time. You have to get out there and tell your story.
Okay, so we will have links for both of those events in the video description so people can check it out. And now we'll get on to talk about what's happening with gold. So very exciting times, as you already said, and your 3,200 target, as you mentioned, has already been hit and even passed. So you said you're still thinking about what your next target is, but I have to ask, so what's your thought process there? Any initial thoughts that you can share?
Well, we were on your show probably 5 times last year, and I told you my target was 2790, so we came within an inch of the actual high. That brought in a lot of new followers. We beat the GDX handily last year by 15-16%. That brought in some new followers. I just posted my first quarter. We posted a 40.77% first quarter. That's going to bring in more people. So we're really excited and feel fortunate to be where we are right now. I don't like predicting gold, that more than a year out, but I will say that let's look at what the big banks are doing, right? Because that is a theme that you and I discussed in January and again in March at PDAC. And I said, contrary to a lot of my peers, that this was good news. A lot of people were saying, oh, this is really the top. Look at all these, banks saying 3,000 gold, it's over, it's never going to get to 3,000. Well, dead wrong. We're in a different paradigm now. This is a different environment. And the big banks, to their credit, we're seeing this unfold, right? You saw UBS go to 3,200 gold a couple weeks ago. Bank of America 2 weeks ago went to 3,350 for next year. That was followed up by UBS just last week, upping from 32 to 3,500. And now today, Goldman Sachs, one of the big boys, goes to 3,700 gold. I mean, this is big news because these firms run so much capital and have so much influence, no matter what you think of them. You have to follow the tape, that old saying of, if you see this happening, you have to get on board in some respect and have exposure to gold in some way. That doesn't mean go out and buy gold bars. It means look at gold equities and how cheap they are relative to the price of gold. And we've been talking about this on your show for, gosh, 2 years now. And it's frustrating, but it's actually getting better. A lot of our gold names are starting to respond. You know, we own Agnico, AEM, that's doing great. You know, a lot of the larger producers, even mid-sized producers, are starting to really outperform. And I think a lot of the gold explorers, which we may get to in a few minutes, are going to do extremely well in this environment. It's just a matter of time.
We definitely will get to some of those smaller names in the gold space. We'll touch on how they're doing. Before we go there, just a little bit more on the gold price. So we talked about the upside here and what the big banks are seeing, and you can kind of extrapolate from there if that's what they're saying. Where is support for gold right now? Because I know things don't go up in a straight line. Even last week, we saw a little bit of a pullback that quickly recovered. So what are you seeing there?
Great question. So if you look at what happened in November of last year when Donald Trump got, you know, the win, right? Gold, I believe, hit around 25.01 on a spike low, and then literally pulled like a COVID kind of V-shaped burst higher. And it hasn't looked back. I mean, it hasn't even come close to 2,500 ever since then. So I always encourage clients to look in November, December for bargains, right? You're always going to see volatility in those 2 months because of what we call tax loss selling. But last year was a double whammy. It was the Trump win, which meant euphoric things for Bitcoin, tech, and everything else. And our sector got killed because people were selling conservative assets in favor of risk assets. And now that is completely flip-flopped. You know, you can see it on GDX or GDXJ, which are the two big ETFs in our sector, right? GDX has broken out. GDXJ has broken out. Man, I mean, I had a 60 target on GDXJ for like May, June, and it's already hit. And it's just shocking, but wonderful at the same time. I mean, this is exactly what we want to see. We want to see the miners start to perform alongside of gold. And so to answer your question on current support, I think that 27 to 2,800 level is going to hold. That's sort of where I've drawn the line in the sand. 2,600 was the previous support level that we were talking about. But I think that 27 to 2,800 range is very, very comfortable right now. For silver, I think that 26 is that big line in the sand. And I personally feel 27 to 27, maybe even 28 is that line in the sand for me. So whenever silver dips below 30, which it did recently, we went out, I bought more physical silver because the gold to silver ratio, which is an ounce of gold divided by an ounce of silver, that ratio is 102 as of last Friday, which is nuts. You know, silver should not be trading this poorly versus gold, or gold should not be trading this well against silver. One of those two has to fix itself. I think we're in a kind of environment right now where gold's not just going to go back to 2,600 or 2,700 to fix the ratio. I think what's going to happen is gold will stay above that 2,800 level, and silver will catch up, meaning, you know, it'll ascend from this 31-ish kind of level back to 34 and test that 35 level, which is huge, which is where we failed just recently.
Yeah, I think it makes a whole lot more sense for silver to catch up versus gold come falling down. Okay, so looking at gold's price drivers right now, we know from our previous conversations that gold has a lot of factors in its corner, but we've got this added tariff element that's really going on right now. So can you help maybe separate how much of gold's move is due to tariffs and share your thoughts on that situation?
I couldn't tell you exactly, of course, but I can say that gold has benefited from all of this tariff talk, right? And the beauty of it is that this is not over by a long shot. I mean, we were calling last year for Trump to get in China's face in a big way, and he's done that. And it's the headline of the last 2 weeks. You know, it started at 10%, then it went to 20, then it was like 34 or some random number, and then China retaliated. And now it's in the hundreds of percent. It's ridiculous. I mean, it's like two small children going at each other. You know, it's fun to watch as a gold investor. It really is, because this just underscores how far apart the U.S. and China are on many issues. And I don't think that resolves itself quickly. And gold, you know, Charlotte, loves fear and uncertainty. Those are the two things that really drive it in past rallies. This time, the table is set. I mean, it couldn't get much better than this. And I wish it were different. I mean, I don't wish for this environment to be where it is globally, but we're here. And so as an investor, sometimes you have to stand back and kind of assess, is my portfolio built for 3 years ago, or is it built for right now? And I would argue that a lot of investors out there are still doing this when it comes to tech and other risk assets, and this is not going to be your year.
Right. And before we turn the camera on, you're talking about this concept of investor versus investment returns that I think ties into what you're saying there, if you want to expand on that a little bit.
Sure. So coming from the asset management world, we used to preach to people that if you're in the market on big up days, that really contributes to your overall, investment performance, investor performance, I should say. And if you conversely are not in the market on those days, you're going to do better, right? Because you're not. You want to have like an approach that is balanced, and most people aren't balanced, meaning they're either like the set it and forget it type, where they're just going to buy no matter what, and they're not going to change their allocation. Those people will get whipsawed in this kind of a market, I think, because holding what you held a couple of years ago to do well this year is not going to work necessarily. But the people that are looking to trade a bit more and be more active in their portfolio, while adding safe haven type assets like gold, silver, related stocks, etc., I think you'll do much, much better. So the example that we were using off camera was Apple, right? Because Apple stock is known by everyone. There was a period of time just last week where we assessed that Apple on the trailing 5 days was down 23% in 5 days. I mean, that really happened. And as an investor, if you're looking at that closely, right, you're not just the type that looks at your investment account once a quarter or something. You're getting scared. You're like, hey, I just lost, quarter of my money in a stock in 5 days that everyone knows it's the household name in tech. So you may have sold that day down 23%. We call that realizing a loss, right? And then now you see it go up huge, and you're going to chase it back in. But then Trump may say something about tariffs and the stock drops again in May, right? And you're down again, and then you might sell again in panic mode. So we call this kind of whipsaw type trading. And it's exacerbated because back in previous corrections like 0809 or 2000 to 2003, we didn't have all this global wealth. And we also didn't have all this algorithmic buying and selling. So we've been arguing that the pace of things, the velocity of things is going to be too much for investors to handle. And you just got a taste of it the last few weeks.
Yeah, I think there are so many ways that people can make mistakes right now by doing exactly how you've laid things out there. Just to be a little bit more looking at the stock market's general equities, how do you see this playing out? Do you see more pain there? Because we've seen some recovery after, the big falls last week. What do you see coming, just to spell it out for people?
Well, I don't see good things for the broad market going forward because some technical levels got hit there pretty hard. Yes, they've recovered. I mean, the NASDAQ, I wouldn't even say the word recovery is probably not the correct word, because the NASDAQ one day last week was up 12%, pretty much on the nose in one day, which I'd have to go back and look at history to see when that ever happened. But that was predicated by Trump saying, hey, things are getting much better on the tariff front, right? Do you believe that? Because I don't. I really don't. I really don't think they're getting better. I think they may improve slightly from the chaos that was created, but I don't think that they're resolved in any way, shape, or form. What's going to happen now is that a bunch of countries that are smaller are probably going to come to the table and deal with Trump because they have to, right? I mean, like, it's oppressive to not do that. But if you're a China, yeah, they're digging in. I mean, like, their rhetoric is not, oh yes, let's talk and let's figure this out. Come on. I mean, you can just look at CNBC and figure it out for yourself as an investor. This is not going well. So I continue to have a zero weight on the broad market. I don't have any money in the Russell 2000, the NASDAQ, or the S&P, like in terms of the actual indices themselves. I have money in Newmont, which is part of the S&P, right? But like, very few stocks in the broad market would I even consider right now, unless they're completely trashed. and there are some, but for me, I'm more of a commodities guy. I'm looking at metals, mining, energy, all that kind of stuff every single day, and there's so much value here still that I don't need to look at the broad market for value just yet. I want to see depressed prices, really depressed, and we're not there yet.
Yeah, absolutely. I understand what you mean there. So let's take a look over at what's going on with the gold companies you follow. So you gave a little bit of update on some of the larger ones, but of course you have companies further down the food chain that you're watching. So any updates you would share?
Sure. There's a couple that, there's still some that have not barely even moved here with gold's ascent. And that really intrigues me because it's only a matter of time before these things start to move, in my opinion. 1911 gold is the first one that I'll mention. That's AUMBF in the States, AUMB in Canada. Sean and Gary are trying to build something there in Canada that could go into production by 2027. And when you're looking at the gold price now at 3,200 plus, let's say you go to 2,800 in 2 years, right? Let's say we have a correction and that's where you're at when you go into production. Well, their cost of pulling gold out of the ground is nowhere close to that. It's much, much lower. So when you look at the type of companies that are going to be producing in a very high gold price environment, that's really bullish for a stock like that. I went back and looked at 2011, 2012, and the price action on that stock drove it to $1 billion market cap Canadian back then in the previous big rally, right? Now it's, I think, like 20 or 25 million, I don't know, 30 million market cap. It's insane. It's like a fraction of what it was with gold at 1,500. Gold's double the price, yet the stock has completely just been cratered. So we look for opportunities like that because it's not going to last forever. We're not suggesting that the stock goes back to $1 billion market cap. We're just saying that if you're at 25, you could easily go to 100 in a $32, $33, $3,400 gold environment very easily, because you're going to see what we call a sector rotation, Charlotte. So people are going to start giving up on tech. They're going to give up on biotech, these things that have made them a lot of money in the last decade. And they're going to be looking for new opportunities, which is why I said that about my conferences. We're getting applications. I'm reading them. I'm approving them from people that are saying, hey, I own a lot of gold in my vault. I own a lot of silver coins. I don't know anything about gold and silver stocks. I'm interested in learning more. And I look at what their net worth is, and it's pretty impressive, right? They're buying. They may have had coins handed to them by a grandfather or something like that, and now they're intrigued to learn more about gold stocks, which is awesome. That's what we need more of, more generalist interest in our sector. So moving away from 1911 gold, I would say U.S. gold. USAU is one we've talked about in your program. Stocks really done well since November when they got their permit in Wyoming. So great name, great listing, only 12.2 million shares out. We love that. So stock really can move in an uptrend. A new one for us that we just started last week, because I like to try to give your listeners some new stuff, is Contango Ore, CTGO in the States. It's on the New York Stock Exchange. I think that stock has a shot to be included in the Russell when it rebalances on April 30th. That's just me thinking out loud. But why I say that is that the Russell, when it rebalances, looks at one key metric, and that metric is size of the company, market capitalization. So right now, that market cap has to be around 125 to 135 billion as we record this. And that stock is getting really close to that market cap size, right? Because it's moved up about 10, 15% in the last couple of days. So if it does get there on April 30th, and that snapshot in time, they will be included in the Russell 2000. And why is that important? Well, they only have 12 million shares out, just like US Gold. So if you have 12 million shares out, and I've talked to management, I know where the shares are held, right? If you look at their website, Contango Ore's website, you can see BlackRock, Vanguard, like these companies are not selling those positions. Then you look at the CEO and his position, he's not selling that position. The stock's too much of a value stock. So, how are you going to buy into the stock as the Russell, right? You're going to have to pay up because that stock's going to move hard, to the upside. And that's the thing that I think a lot of investors miss is that when you have a small amount of shares outstanding, like US Gold or Contango Ore has, you can basically, in an up market like this, move much faster than people expect. So that's one we just added because they're a producer in Alaska. We like Alaska. We like Wyoming. You know, we like everything US right now, given the backdrop that we're seeing and Trump being very supportive of our sector.
Okay, really good updates there, and always appreciate the new name for people to consider. And as usual, we'll put the names and the tickers in the video description so that people can know exactly what they are. Okay,
Sure.
so that covers us on the gold stock side. Before I let you go, we will be doing a more, I think, complete and usual longer interview in just a few weeks. But before I let you go, I want to at least touch on critical minerals and the special situations angle, because I think that's something that's really coming to the fore now as we have this trade war really develop, especially with China and with the US looking to find more of its critical minerals from within itself. So anything you would share on that note?
Yes. So we've been saying for a long time, over 2 years now, that this situation in critical minerals is getting much and much worse for the US because they really took their eye off the ball there at some point. You know, let's not even point fingers about who was wrong and who was responsible for that. Let's just say that the U.S. is far behind China in this race in the critical mineral space, and you can't fix that overnight. It will not get fixed in 3 months, 6 months. It's going to take years for us to catch up. So what I'm seeing, Charlotte, from my CEOs, I talk to 8 to 10 a week minimum, is that these guys and these women are basically saying to me, hey, we spent a lot of time with our people in Washington. I've spent time with the local government in my states. Everyone is much more supportive now than they were even 6 to 12 months ago. The Trump regime has really put a fire under like this concept of, you probably heard the news in March. I mean, he literally said publicly to his staff, get me all of this information on these critical mineral deposits in the US. I want this on my desk within 10 business days. It's like, whoa. I don't remember a president like saying that out loud. I know Biden did something like that back in like 21 or 22, but it was like a 40-page, 40th page like story, wasn't front and center. And that's where I think the environment has really shifted, is that now this is like being talked about by everyone because it's on the front cover of magazines and CNBC and whatever, right? Is like getting a better understanding of who has these minerals that are going to make our lives even sustain the way they are, right? Like when you're talking about a Tesla battery, a lot of that Tesla battery is nickel, copper, silver, things that, our companies that we talk about are finding and will find if they're an explorer or developer, right? So to that end, we continue to buy critical mineral stocks. We talked about American Tungsten, I think once on your show. It did extremely well. The ticker is DEMRF in the States, TUNG in Canada. Just today, they announced the new CEO. I haven't even had a chance to talk to him yet. He sent me an email. I would say that they are very well positioned to get DoD grant money. And the reason I say that is because if you look at their website, they're telling you so much in their presentation deck, right? Like they're not hiding it out there. If you know how to read these things, you can kind of read through the tea leaves and say, okay, this is a company that's based in Idaho with a past producing mine that can probably get started in production again in much faster time than the world expects, right? And why do I say that? Well, the White House is literally going to companies, and I'm not going to name who, but they're going to certain companies and they're saying to them, hey, how much is this going to cost to get that thing that you mentioned in your news items that you're trying to get, right? Whether that's a 43101 or a PEA, how much is that going to cost, right? That's question one. The second question is, how much money is this thing going to take to build into production, right? Which could be a huge number, as you know. It could be over $100 million. But these companies are gladly sharing this information with these representatives because they want funding, right? They want to get to the finish line and they want to get it done faster than it has taken them, right? And I think that's going to happen. I really do. I think that things are going to get accelerated for an American Tungsten much faster than people expect. So we really like that stock. I talked to a specialist as well, who I won't name either, but this guy is bright, and he's done some work for me on power nickel, PNPNF, which you and I, both know Terry Lynch. Terry and I had a short problem in that stock last year where it wasn't it was heavily shorted. And this gentleman did some research behind the scenes to kind of identify how much of that was actual short interest and how much of it was naked short interest. And Terry and I always say publicly, we don't have a problem, with short interest. If you want to bet against the stock, go for it. But we do have a problem with naked short interest because it's not a level playing field. The average client has no idea how to compete with something like that. The reason I say this is because I just got the report from the guy today, and on American Tungsten, it's a 51% short interest over the blended last 5 months, meaning that half the volume you see in the stock is short, which is crazy. And so there's a lot of people betting against the stock right now, which I love because they're going to be wrong. Tungsten in general is such a short supply mineral. The U.S. produced 0 in 2023 and 0 in 2024. Like, this is a U.S. project. Explain to me how this wouldn't get fast tracked in a Trump world. I mean, I just don't understand how people would bet against that. I just don't think they understand what they're betting against. So as an investor, we love taking the other side of that trade. I've talked to you about Guardian Metal Resources, GMTLF in the past. We still own that. In fact, we increased our holding in that in Q1. I just mentioned, Power Nickel, which has changed its name to Power Metallic. That's PNPNF in the States. Terry does a great job. He's going to have a bang up year. He continues to hit in the copper space. Copper is one of those kind of in between commodities, right? It's not precious, but it's also in short supply, so it trades well. Copper's having a fantastic year, and I think people should take a closer look at that stock because Terry plans to drill a lot. He just put out a press release saying that they're going to move from 3 rigs to 6 rigs. When I met Terry 2 years ago, he had like 1 rig. Now you've got 6 rigs on the project. You're hitting, a lot more about the actual project than you did. Those are all very bullish things.
Okay, really good to go over those special situations, which maybe as time goes on are going to become a little bit less unusual. So good to go over those ones. Again, we'll have the tickers and names in the video description. Anything final you would add, final notes of interest or things investors should be thinking about right now before I let you go?
The only thing I'll mention is that I still think there's a lot of people out there that are watching this from the sidelines, and that's a huge mistake. Things are going to move much faster than you expect. And if you don't believe me, just pull up some of the stocks we talked about today and look at these charts. Take 10 minutes to look at the charts. They're moving really fast, and you're not going to be able to keep track because the moves that I'm seeing on certain days are 8, 10, 12% moves in one day. And you're going to miss things by not taking action and at least putting some bids out there. So my encouragement to people is, don't buy a full position if you don't feel like it. Buy something though, because you want to make some money in this market, and then I think you're going to get the bug, whether that's a gold or silver bug, I'm not sure, but you're going to get the bug to continue to buy more stuff in a hot gold market, and I think this is the time to go for it. The backdrop looks amazing.
Okay, well, I think that's a perfect note to end on. And as I mentioned, we'll have you back very near in the future to go over developments in these sectors again.
Thanks a lot, Charlotte.
Of course, thank you so much. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.